All right, everybody, welcome back. Thank you for watching. If this is your first time, welcome to the channel. My name is Sanjeev Advani. I'm a real estate entrepreneur, and I'm looking to bring you real estate property management and construction news in an easy to digest format that will help you invest in the future. And today we're actually going to be going over a really interesting article that I was looking at, which is home sale profits drop for the first time in decades. And so what does that mean? Is real estate still a good bet? That kind of thing. Do we still see profits in real estate? Are we going back towards a recession? So we'll go into that in this article. And so as they start the article, they basically go over the fact that ROI, so return on investment on average, has been about 56.5%. And so that was about $121,000 on a typical home sale, right? And then last year well, not last year, but in 2022, you had a number that was about 59.8%, so a little bit higher. So in 2022, 59.8%, and you had $122,600 on average in profit on a typical home sale. So again, going from 59.8 to 56.5, there is a little bit of a drop there. But if you take that and you look all the way back to 2008, 2009, 2010, even up to 11 and 12, you do see that the average home seller sold for a loss. And so really, if we're thinking about it, well, the average home seller now may not be making the record profits of $122,000 per home. They may be making $121,000 per home, but at least they're not selling their home and losing $60,000 on their home, right? And so that definitely means that we are seeing more of a stabilization in the market. It doesn't look like it's a huge drop off. And so that doesn't mean that we are going to see a whole bunch of properties just start flooding the market and everybody's losing their shirt. But you also have to think about, what does that mean as far as the market on the whole? So can we look at other asset classes to be able to invest in and achieve a higher rate of return? Or is real estate still a good market to be in? Now, if you have an average sale profit of 120 some odd thousand over a given period of time, so for example, over, let's say, 13 years, which is the average time people hold their homes, then over the past 13 years, we would also have to compare, well, what happened to the stock market and see, is that still a good rate of return? So specifically, we're also seeing different regions performing differently. And so, for example, Austin, Texas, their ROI went from 67% on average to about 46% on average. So pretty big drop there, but they were a very big market that got really hot in the post-COVID era and everybody decided to move there. Same thing with Phoenix, same thing with Nevada, same thing with Salt Lake City. All of these places are down. So from highs of 79, 80% in ROI down to 60 to 65% in ROI. Now, that being said, you also still have the Midwest. The Midwest is one of those places where people kind of are like, okay, well, market cooling. I don't know if I still want to be there, but Scranton, Pennsylvania, if you look at that, their ROI went from 75% to 89%. So it actually went up. South Bend, Indiana, same thing, 53% to 66%. Hartford, Connecticut went from 53 to 65%. And then you have Rockford, Illinois, and Rochester, New York, which are generally around 50% going up to about 60%, right? And so you still have places where you can see ROI gains, but the big problem is that you're not seeing the huge gains that you might have had in the previous market prior to going in, everything like that. So really looking at these numbers, it really says to us that yes, real estate is still a good investment. You need to purchase correctly, right? The money is generally made on the buy side. And so that is where you need to be careful when you purchase. You need to be running the numbers. You need to know how those numbers work. And then you also need to be looking even more so at the larger market, right? Because if we're going into a market such as, let's say, San Francisco, the ROI in San Francisco from 92.7% down to 79.5%. Same thing with Las Vegas, 74% down to 61%, right? So we want to make sure that although we are still going to make profit in those markets, we want to make sure that we're investing in markets where we are going to increase our profit potential, and then we have stability and growth for the future as well. So if you did like this, please comment below. Please let me know any questions that you might have. If you thought this brought you value, please like and subscribe. And if you thought this was terrible, please let me know as well, so we can start fixing this and we can start to bring content to everybody that is going to help them invest over the long term and is going to help them invest in real estate in a more educated manner. So thank you, and we'll see you on the next one. Take care.